Good morning, Steve Freed in Chicago with the morning grain comments. Well, grain markets are lower today. Some follow-through selling on maybe an overbought situation, and the map showing some rain next week across parts of the Midwest. Underneath the market, though, I think we're finding some support with about 57% of the U.S. soybean crop areas in drought situation. We've got Iowa at 83, Illinois at 82, and in the corn, 64% of the corn acres is in drought situation. Again, there's all kind of levels of drought, minor, moderate, heavy, and so again, I think that parts of eastern Iowa through central Illinois and west central Indiana, maybe include southern Wisconsin, Michigan, and that probably is in the higher drought category than other areas. Rains continue to be in the Dakotas and down south and in the southeast, and the maps show, as far as the American model, a couple of rain events next week, midweek, and especially late next week. And then the ensemble has another rain early the second week. The European model tries to bring some rain in late next week for parts of the central Midwest where it probably needs the most. So we'll see on Monday if crop ratings decline again, and then we'll see how much rain is in the forecast. There are a couple of weather forecasters out there that really feel that we're in a pattern that these rains are on the maps, but that they may not materialize, and that we won't see enough rain to offset evapotranspiration and the stress, especially on the corn crop as it starts going through pollination. We've got export sales today, expecting some low numbers, continue to see competition from Brazil, beans and corn, and from Russia on wheat. So we're trying to figure out if the drop in the U.S. supply is enough to offset the drop in demand for U.S. exports. Outside markets, again, Europe, most central banks raising rates to fight inflation, and that could put us into a recession globally, which could reduce demand for food and energy. Consumers are also seeing less consumption of food because of reduction in disposable income. We also note that the dollar is moving higher again, which offers resistance to commodity prices, and that in Washington, again, the EPA data was negative to soybean oil, but again, soybean oil may be trying to find some support near this 54 cents a pound area, and we're seeing some liquidation of the long meal short oil spreads. Yesterday we also saw people liquidating positions like long corn, long beans against short wheat as they try to even up positions going into the 1st of July.